While you were looking at individual pieces of the puzzle, Elon Musk unified them into a $1.75 trillion behemoth designed to fund the colonization of Mars. On March 2, 2026, the financial world shifted when Elon Musk confirmed a single word in response to reports of a $1.75 trillion initial public offering. Yes, this is no longer just a story about rockets or social media. While the public was distracted by daily headlines, Musk executed the most ambitious merger in history, merging xAI and X directly into the SpaceX mothership. The result is a vertically integrated innovation engine that controls everything from the satellites in the sky to the algorithms in your pocket. This merger creates a company more valuable than Meta or Tesla, leading toward a record-breaking IPO this June. To understand the gravity of this deal, we have to break down the math of the valuation, the emergence of orbital data centers, and how this move secures the financial future of the Mars mission. How do you reach a valuation of $1.75 trillion? You start with the most successful rocket company in history. By late 2025, SpaceX was already dominant in the global launch market. However, Musk realized that launch capability alone would not provide the high-margin capital required to build a colony on another planet. He needed a massive software play to complement the hardware. This led to the all-stock merger where Musk folded xAI, valued at $250 billion, and X, valued at $33 billion, into the SpaceX corporate structure. While the initial combined valuation was pegged at $1.25 trillion in early February, the target for the June IPO has surged to over $1.75 trillion. This $500 billion jump in just 1 month is driven by a singular realization among institutional investors. SpaceX is no longer just a transportation company. It is now the world's most powerful artificial intelligence infrastructure play. The strategic logic behind merging a rocket company with an AI company centers on orbital data centers. Terrestrial AI data centers are reaching a physical breaking point. They require staggering amounts of land, specialized cooling, and electricity levels that Earth-aging power grids can no longer support without environmental damage. Musk's vision is to move the brains of the internet off-planet entirely. Starship will deploy a constellation of 1 million satellites that function as solar-powered data centers. In the vacuum of space, it is always sunny, providing near-constant power with zero maintenance costs for cooling. By moving the Grok AI models into orbit, Musk can scale compute capacity to levels that terrestrial rivals like OpenAI or Google simply cannot match. Starship version 3, designed to launch almost every hour, will serve as the delivery truck for this trillion-dollar space brain, creating a compute network that exists outside national jurisdiction. While the AI and rockets capture the headlines, the real financial engine behind this valuation is Starlink. By the end of 2025, Starlink surpassed 9.2 million active subscribers, effectively doubling its user base in just 15 months. The service generated over $1 billion in revenue last year alone. For 2026, financial analysts are projecting that number to skyrocket to between $16 billion and $24 billion. This software-like profit margin is what allows SpaceX to transition from an aerospace contractor into a global telecom utility. This steady, reliable subscription revenue gives investors the confidence to value the company at nearly 100 times its trailing sales. Without the consistent cash flow from Starlink, the Mars mission remains a distant dream. But with the combined power of the new merger, the colonization of the red planet becomes a mathematical certainty. The upcoming IPO planned for June 2026 is expected to raise as much as $50 billion in primary capital. This would make it the largest public debut in history, easily surpassing the record previously held by Saudi Aramco. However, this is not a standard public offering. Reports indicate the company is implementing a dual-class share structure. This arrangement gives company insiders, and specifically Elon Musk, outsized voting power, even if they eventually own a minority of the total shares. Musk has historically expressed a deep dislike for the short-term pressures of public markets, arguing that the desire for quarterly returns often conflicts with long-term goals like Mars settlement. By structuring the IPO this way, he secures the $50 billion needed for his lunar projects and advanced missile defense systems while keeping the keys to the kingdom firmly in his pocket. With this merger, Musk has effectively constructed a closed-loop economy. X provides the real-time human data needed to train advanced models. xAI provides the intelligence and processing power. SpaceX provides the physical infrastructure to leave the planet, and Starlink provides the global reach to connect every person and machine on Earth. For now, the focus remains on the June launch and the massive influx of capital it will bring. The $1.75 trillion valuation is more than just a number on a balance sheet. It is a definitive bet that the most valuable real estate of the 21st century is no longer found on Earth, but in the stars above. This strategic consolidation ensures that the path to Mars is paved with the most advanced technology and the most stable financial foundation in history. The $1.75 trillion valuation is a definitive bet that the most valuable real estate of the 21st century is no longer found on Earth, but in the stars above. Thanks for watching.